Gentlemen, how are you? Market Sniper here, coming back at you with the traditional markets. That's right, gold, silver, oil. We're going to talk about that. We're going to talk about the dollar. And of course, the great inflation trade. What has happened has now started to happen. What were the events that the chief Satans at the Federal Reserve brought about that led to the smackdowns, the slamdowns? A not-for-profit sale at the couple of minutes before the close on silver, huge dumpings. Yes, we'll talk about that a whole bunch more. Also, we're going to look at anti-fiats more broadly. So we will take, which is something we don't typically do, but because crypto, Bitcoin is part of the anti-fiats, we will do a pass by there. So if you're a crypto guy, welcome as well. You can watch too, because this is important. The other half of Bitcoin is Bitcoin dollar. And the dollar, what's going to happen with it? Is it about to be strong? Is it going to be sustained strong? We've got a lot to discuss in that. Couple of things that we want to do almost straight away, though, is we've got to look at the God market of the anti-fiats. So typically the first place to go to is gold. Gold. Silver is the little sister. Also, something very, very important that we're going to talk about, and we're going to go straight in to show you, is the debt markets. This is truly, if you want to, if you want to know the holding home of the Ponzi scheme and Federal Reserve banking cartel scam that they are perpetuating on everybody in their way of creating money, then the truth of the matter lies in debt. Debt markets are the bond markets. Now, many of you, your eyes glaze over. It's meant to be that way. They don't want you to understand. You're not meant to know how they are running that scam. And I will explain it to you, and we'll take a look at that and what's going on in there in terms of where we are and how actually, despite this being tumultuous last few days, very little long-term has changed, but short-term, what might you need to face up to in terms of your trading positions? So at an investment level, we are the big silver gold longs. Usual story, bring out my brick. This is money. This is real money, and you can get it. Links are below, pure gold. You can use other providers if you want. It's absolutely up to you. But investment level is a net accumulate. Nothing in terms of what's recently just happened is going to change that. But let's hear what did happen. Let's get straight to it and get the mainstream or the corporate paid prostitute media's take. Let's have a little look at that. The Federal Reserve, created from Jekyll Island. We went there, we YouTubed from there, muddy island, separated off the shore of Georgia, that was visited in secret. Read the creature from Jekyll Island. From Edward Griffin, a true man of insight and of great note and worth in my worldview, if you're interested in truth and understanding how the Carnegie, all the big family names that were controlling it, forced the re-entry of the cartel of bankers being the core custodians of your monetary system. And it happened there. Anyway, so these are actors that don't work for you, they work for themselves. They pretend to be governmental, they are not. And this is what they have said. The Federal Reserve considerably, key word there, considerably raised its expectations. Whatever happened to transitory? We were all laughing. You remember me giving lots of lols to the transitory. If you follow us on crypto, they were lying. They knew they were lying. People always go, oh, they just slow. They don't get it. Like, you have a special insight. They get a whole bunch more than you think they get. This is all orchestrated. And they were going to lie and hang on to the lie until the lie no longer worked, and then they'll just change. And that's exactly what they did. Considerably raised its expectations for inflation. Now, I want to, once again, and I'm going to keep hitting this nail home because you all get lied to. And unfortunately, rooting out bad information and routing out the lies takes a bit of repetition. Some of you may know this already. Printing money is inflation. It's inflation of the money supply. That's all it is. Inflation of money supply. Print, create, whether you do it in digits, is an inflationary event. That's the end of it. It's not if, but, maybe. Price increases at the till on your milk and bread are a knock-on effect of an increase of money supply without a commensurate increase in the same number of resources. Wheat for your bread, cow's milk for you to drink. So in other words, you hand over more of your old money, which has been diluted by all the new money, to get the same amount of milk and bread. Because when they doubled the amount of money, the amount of cows didn't double, the amount of dairy farmers didn't double, and as a result, there's not a double the amount of supply in milk. So in actual fact, you pay twice as much. Now that is a symptom of inflation. First, inflation goes through assets. We have had an absolute asset boom. Everything in terms of valuations, particularly in the tech space, is at all-time ridiculous extension highs in terms of all bases of comparison before this. Who gets all that money that was proliferated? It was initially going to institutions, quangos, friends of government, big mega corps that are associated and largely controlled and part of the cartel and scam that is working against you, etc., etc., etc. These are the people that have got that, and they run their own stock prices up by buying it, etc. Now, once you start paying to the end citizen, because remember, you want your Sabbatean Frankist global communistic system, like you did when, and your genocide as well, like they did in Russia, like they did in Mao China. The same characters are doing it globally all over the world, like they were supporting it in Africa. They are going to do the same things. And how do they do that? They need to pay you something to make you further reliant on government. So let's have a little look further at the statement. How the central bank gave no indication. However, the central bank gave no indication as to when it will begin cutting back on its aggressive bond scheme. So actually, this is a word burger of intent with not so much of real facts. This is a word burger, but with the support of their banking cartel that could do a major dump of silver, gold, etc. at the market, they can get price to respond like it is far larger commitment to take action than it actually is. So what are you learning in this? It says, no indication as to when it will begin cutting back on its aggressive bond buying program. Why? Because they don't want to make a basic rod for their own back, and they need to keep doing that. They know they need to keep doing that. They had the repo system fail. That was happening before your pandemic actually happened. It was exactly just under 3 years from the yield curve inversion, which is the perfect prediction of a major depression. All of those indicators were flashing red. Repo system was unraveling. This was 2019 September period, August, September into October, and all of those things were flashing red. We remember it very well. We were discussing it here with you on this channel. What ended up happening? They brought about this event that led to them having the Great Depression or the crash that they needed and all the deflation that went with it. So that's gone on. That's gone on right now, and they still need to support the markets with this bond buying. So why are they going to commit to something they know they're going to have to roll back? They already have a lack of credibility. They were denying inflation, and then they went from denying it to it's transitory to now jumping to it's a considerable raised expectation. That's quite some U-turn. It's funny how YouTubers, just like me and many other people, are all way ahead of the Fed. Well, we aren't really. They just lie. They just tell you the lie until it can no longer stick. Then they tell you a new lie. That's how it works. So Fed Powell acknowledged that officials discussed the issue at the meeting. As expected, the policymaking committee unanimously left its benchmark short-term borrowing rate. So rates never went up. They made no commitments to cut QE. All they did is changed words of intent, which they regularly will change again at some later point. And for that, you got a massive sell-off in gold, silver. The inflation trade has been made to unwind a little bit. It's to shake out everybody who's suddenly caught up to the nature of the game. What else was said? You can think of this meeting that we had as talking about a meeting. So we're now going to start talking about when we should talk about what's potentially a thing. I mean, this is comedy show. This is almost Monty Python-esque for me. You know, let's have a meeting about a meeting about a meeting. It is Monty Python show, but it was reacted to with the support of their cartel of swindlers, their fellow swindlers, in an immense fashion. So let's go and have a look at some of that damage. And let's have a look also at that key debt market. So we start with the God market gold, and here come the charts. Boom, boom, boom. Let's go straight to this one. You might remember this one. We've shown you it before. The pullback to the range. This is a very interesting key level. I'm on the, wait for it, daily time frame, I believe. So here was your run up in gold that we had a trade. I'm going to highlight this level again. That was your CV19 orchestrated event where they got to pick up a lot of your gold and your silver for real cheap, particularly on silver. That was a key level that it had run up to there, which we put right the way through. It was your $16.80, $16.80, which happened to be your support base on this pullback all the way through. And you've had essentially this channel pullback that you pivoted in. Nice little squeeze there. It ended up making its inverted HVF target, although it took a while. Down, 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 down. And then the touch on what is not a valid head and shoulders, because this is already in a bull market, but there are many who subscribe to books that will say it is. But that is a key level of significance. 1680. 1680. And then you get this rally up, up, up. Where do you run into? You bumped into our funnel. Now, we did a warning on this, on gold, and we said you're going to run into some trouble at the 1911 area because this zone is an important zone. It's a fully performing inverted HVF, and sure enough, you did. We weren't actively trading this. We were engaged very heavily in other markets, including oil and also cryptos. Let's drop it down and see what happened there. You might actually spot something. A number of times I've warned that when you have a key level, you sometimes get a fractal. So here we are. This is that big funnel that you bumped into and just ran. 1911. That would have been a great place to have taken your profits. Bearing in mind, it's going to be an awesome inflation trade. We're barely in the first innings, and there's a little bit of a pushback after some great dominance, and there will be many innings to come. Think baseball type number rather than thinking of halftime first oranges. And so we've got much more to happen. You'll see we had a legacy target area zone at 1850, and we set up this little fractal. We commented actually on that in our premium area on the jump share updates that I do with my premium community. And it was all occurring, interestingly, and I've warned you before on this channel that often you will get fractalized patterns against key levels. And that was that channel topping out, kind of in a channel which normally is not bearish. On its own, you could have a bull flag. But when you then go ahead and form a little fractal all based along that level there, it can often give a very high risk-reward trade. And it is insiders, the DNA of insiders that were dumping, that set up that inverted micro HVF on a lower time frame. That was your warning. You got a bit of bounce support here on that target. You bounced, and then you came down again, and you retraced up to one of the key levels at 1800, key round number, and now you're down again for today. So the theme is panic sell the anti-fiats. Right now, you should not be doing that. I have no leverage trades on gold nor silver. I have net investment accumulation. Net investment accumulation for a bet against the fiat system. If you are positioned like me, this is a net accumulation opportunity, and it might run for a while. We don't know how long, but I can say one thing: in a year, 2 years, 3 years time, my expectation is you'll be higher across all these markets. Why? Are they going to stop printing? Are they going to stop the furlough system in the UK, the stimulus system in America to all those businesses? Well, they'll have riots in the streets. People have stopped working. They aren't taking the basic bottom of the range jobs anymore. Minimum wage, no one works for a minimum wage anymore. They stay at home and suck up stimmies checks rather. They can sit and day trade on Robinhood and watch Netflix rather than do anything productive. So why would you give up 9 hours of your day to put on a Mackie D's uniform and say, have a nice day, as a greeter at some fast food degenerate place that sells bad health to everybody. No, I wouldn't bother with that myself. So that's where you are at. And inflation means that lower end of wages, which has lagged for decades, is starting to peel up. Who did it? Your UBI Bolshevik communists. The greatest criminals on this planet, if you truly know your history. And they will always refer to fascism and Nazism. They are the criminals of the top of the pile order. Let me tell you, more blood has been shed there. Anyway, that's history for another day. That's Reset Sniper. So that's gold. What do? Net accumulate on these opportunities. What about silver? Silver, very same. In fact, we were commenting about the very low volatility that was occurring, and we also highlighted the $28. Let's go to a longer time frame just to remind you why that was there. $28 has history. So let's show you that clearly. $28 was the level we assigned to this descending triangle, best described in the traditional technical analysis manner. Descending triangle with the base there. Remember, your base is usually just run. That is the key levels of significance law of HVF method. Take that one for free from us. You want to learn a bit more? There's a link below. Click and book a call and you can do it. So that was the key give out point. That target was run. We actually did draw an inverted in there, but it's a retrospective draw. It's not a high quality one. And you can see the targets were made. And actually, you can find further descending triangles that saw further selling off a couple of times during the silver. We were net long accumulators while trading short in this market. This was your absolute low since the great financial crisis, events of the great financial crisis. In actual fact, that's not right. My apologies. Since that is the great GFC right there. So subsequent to the great financial crisis, those were your absolute low, and you could buy silver with an $11 amount. The snapback and subsequent percentage run has been very, very productive. So what are we looking at now on a shorter time frame? Now you know that blue line, why it's a blue line, why it's a key level of significance. It's where we've been tapping into against the ceiling on silver. And they're not in any hurry to want to see that go away. And in actual fact, this is what happened. Too many people have come to the inflation trade. So the inflation was bookended. COVID, 19, 20, 21, and all variants thereof were a huge bookending event. It was the end of debt going up in value is our call. It occurred March of 2020. The subsequent save the global economy events were the beginning of an inflationary cycle. That was the inflation. Now that is over a year and 3 months ago. Unfortunately, other people have only started to come across to the inflation side in the last 3 months, and it's become very political and mainstream. What does the control structure need to do in the federal cartel of Sabbatean Frankist management of your money? They've got to stop the word from getting out. They're losing credibility. Everybody knows they're losing credibility. They denied its existence. They said there's no inflation. Inflation is dead. Then they said it was transitory, and now they're having to admit that it's never gone away. And that printing money is exactly as we said, it's the inflation of the money supply. It is inflation thereby. So this 28 tapping that we've seen had to run into a bit of a wall. Silver did not do the pink channel down that gold did. It's even more undersupplied. It's a higher beta. In fact, it set up this continuation, and but for the Wall Street bets, little bit of excitement over there, it is setting up a continuation pattern. However, it was extremely hard hit where on that 28 number, where it was perpetually tapping against that number. What's it taken to take it down to the 26 level that you find it at now? An incredible statement. A reversal of view, a marked change in when they expect to start increasing rates, a whole U-turn. And this is not the first time we've caught the Fed out on a U-turn. You may remember the period when they were saying they were going to taper and all of that. And they actually did one element of taper. We said it won't last a single bit and they'll be reversing completely and going exactly the other way and printing. And all of that has transpired. All of that is transpired. They cannot be trusted and believed in any form in terms of bringing back anything that resembles real price discovery in terms of interest rates. Your interest rates would need to be in double digits. Yes, sir. They would need to be in double digits. They would need to be where Paul Faulkner last dealt with inflation in the 80s. They can't do it. There's too much debt. It would be an instant system fail. They can't even get 1/3 of the way there. Never mind that. Instant system fail. So what do? They pump the dollar, because where is everyone commenting about the inflation and inflation stats? In America mainly. Who has been doing the printing for the world? The reserve currency in America. What's going to change? They're going to give a little bit of strength to the dollar now. And at whose expense does that strength come? Currencies are always a relative thing. So for that, we transition to the euro US dollar. Let's just show you the strength on the Dixie first. And let's also remind everybody that we have suggested that this could happen and that you get a macro, Mr. Johnson, Brent Johnson, dollar milkshake theory, HVF setup. In other words, that we were approaching a critical level here, which we identified as the 88.5 roughly to the 89. We can say the 89 level in actual fact, which was the last low of 2018. That doesn't feel like it was that long ago. By the way, we're in 2021, talking about 3 years. And the last HVF on the dollar is to my left there and was a huge squeeze. And that was the run you got, by the way. That is epic. If we were to get something on that scale, even half, it would be absolutely destroying to who? To the likes of the Turkish Lira, the emerging FX that are already dying. So what's actually going to happen is Americans have, by the devaluation being mainly put on their currency, although Europe has printed, other countries have, they haven't done yet on the same scale. Americans, by taking the bulk of the devaluation, have taken the bulk of the inflation, shortages, prices, people paying the same amount for second-hand cars that's very close to get them a new one, which can't be ordered because delivery times are too far out, etc., etc., etc. These are supply and inflationary-based events. So what could indeed happen is this turns into a macro continuation pattern. And as we've said to many people who've mocked Brent Johnson, he may well be proven right. Just his timing might have been a touch early. This continuation pattern is still on, and you have found support. But the key point I want to make about that is, can it afford to go up as fast as it came down? Absolutely no, in my opinion, because that would take you straight violently into the dollar milkshake theory, and you would see all the emerging currencies start to fail on debt payments. So your South African rand, your Brazilian real, your Indian rupee, your Turkish lira, etc., that teetered. The Turkish lira teetered. They have 19% central bank rates there, by the way. 19% that they are paying to stop the damage on the Turkish lira. It's worth actually showing you. They didn't change the rates. Guess what happens to this currency in its apparent stability, where it hasn't done too much recently? If the dollar starts to go up even 10, 15, 20% in the space of a number of months versus the lira. Huge problems. They will not be able to pay their debt. They're kind of bankrupt already. By the way, they're the most extreme, but you will have a rolling emerging crisis across the board. Commodities are underpriced in terms of inflationary dollars, even with the highs and the pullback they've now had. They're not making enough money. They're not selling enough money. And what will happen is they can't pay their debt. The currencies will fail. You think Argentinian peso, Venezuela, and that will be more broadly the case. This has been the HVF chart since 2013 that hasn't stopped giving, actually, but for costs to finance now because the rates are 19%. You can't afford to hold a long-term USD Turkish Lira position open unless it's really moving in your favor. Why? Because they are backside to the wall. But wait for a pullback, wait for the dollar to start getting stronger, and this one comes alive again. And many others that are not yet that high in rates, which could include the USD ruble, Russia bad, South Africa, all of them, Brazilian real, and many, many others. So that is a small look at the Dixie, the dollar, and some of the crises. They are painted in a corner. If they let the dollar index go up far too much, far too fast, the issue they will have is that they will start to destroy the emerging FX markets. How's it affected the euro? Let's have a look at our friends who've borne the brunt of this. Remember, what's good for the dollar is typically universally bad. There's a binary relationship somewhat with the euro. This has been a largely managed FX market. People say they don't want to do pegs, obvious pegs and pins like they did against the euro Swiss franc. Maybe that they learned something. We called short in 2009 before anyone had heard the phrase Greek crisis, when it was at 1.56 to the euro Swiss franc. It traded below 1. They set a peg at 120. We said the peg would fail. That is our history with the euro Swiss franc. Now they've become smarter. This is how they manage two major currencies. This is what they've done. They find a range inside which it can move, and you essentially have a big box square. Let's draw it for you, fat cokey style. Many people, especially in the breakout camps, were calling for single digits here when you're at the low end. Single digits at the low end, and then calling for new highs at the high end. This is a holding box for the euro. This is your defined range, essentially from 105, 106, which is round about there, up to around 125. And you do this. Boom, 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 boom. And the aggregate accepted median, which is your actual peg, but for which a large tolerance is being accepted, runs through here in the middle. It's the cheese in your Big Mac, Euro USD. Who doesn't love that scene with Samuel and John Travolta in the Pulp Fiction? Let me introduce you to your Big Mac, Euro USD FX scam with extra cheese. There you go. And the truth therein lies in and around the 114, 115 range. And give or take either side, one takes up a little bit more flack on the inflation and then the other. Right now, this half of the burger is America taking flack on the inflationary numbers. They're getting too much attention. Everybody's seeing their game. Time to pump the dollar. Prices will come a little bit more down. There's more buying power back in the dollar. What's happening to the euro? Spiller Mac Thriller heading for the cheesy bit. And possibly even a lower dip. Maybe we'll be focusing. The media, that's all part of their cartel, will focus on the banking crisis in Euroland, all those old chestnuts, a couple of things, why it's been worse on the pandemic in Europe and why tourism is down. Who knows? Who knows? Who should really care? They'll focus their searchlight wherever they want to highlight a particular aspect and ignore other things. And what you get is you get this sell-off. Welcome to your Big Mac a la Euro America cartel axis with extra cheese. And that's how it will be referred to from now on. And I think it's time the Europeans faced a drop in the euro. What happens if your euro drops and the dollar goes up? Anything you're buying from America costs more. Some of the inflation that is getting all the headlines gets taken away from America and gets shifted to Euroland. You see, everybody's got to go down. Everybody's going down. There are all jumpers out of the plane called Anti-Fiat, which has gold in it, silver in it, Bitcoin in it, oil in it, all things that can't be printed. And they're all falling. There is a European, there is an American, there is a Japanese free faller, and they all have parachutes. Right now, Mr. Le Big Mac American has been plummeting faster than the European and the Japanese, who only eat sushi and foie gras. But what ends up happening is, whoa, everybody's looking at each other relatively, forgetting that the plane keeps getting smaller and the ground is actually getting closer. You're not in that moment where you realize they're all hitting the ground. All fiat systems will fail. And the reason you don't notice it is because everybody is a leper in the leper colony. We do not have independent central banking. They are all over indebted. That's the difference between Venezuela and Zimbabwe. They lost control of their currencies relative to the rest of the world. They did exorbitant degrees of printing. What's happening now is that everybody commits the same sin so that in a relative way you don't notice it. If you're all lepers in the leper colony, you don't know what a healthy human looks like. Just the degree of scab varies. And right now, America's been looking a little too scabby. So what's happening? It's time for the Europeans to lose a finger and drop a leg and get a bit scabby so that the Americans can be cut some slack for barely having any limbs left. Okay, so welcome. You've learned a new phrase. Big Mac, extra cheese. How's the comments doing? Does that help you in understanding principally what we're saying and what's going on here? Also, by the way, the USD, Japanese yen, a big faller. A big faller. Let's bring up the sushi roll that comes out of Japan. That is the measure of the Le Big Mac. What has been going on with the USD JPY? Often referred to as it used to be the old carry trade when Japan was the only country with ridiculously low interest rates. They borrowed in yen. They leveraged and speculated elsewhere where they could get much higher yields, and then they paid back. But the problem every now and then is they would have to pay back in crises and the yen would spike. What's been happening in the yen? Well, overall, we see something brewing. That's a fat cookie. Whee, kindergarten cop. There you go. Something will be brewing. Something will be brewing. Is it upside? Is it downside? We are biasing to the possibility of the dollar milkshake theory even being correct. Just the timing being early. Down, down, down. Shortage. Because of inflation, they can't overprint. The pressure starts to shift on the other nations. The Triffin's dilemma, short explanation, explained in other videos and also explained by other people like Lynn Alden and everybody else. The Triffin's dilemma is that country that has the privilege, the exorbitant privilege of being the supplier of the base currency for most of the planet, actually is a deficit runner. That means they have to buy more of other people's stuff to send their currency offshore to people that need dollars to buy, commodities priced in dollars, wood priced in dollars, oil pulled out in the Pacific under some other country that's being sold to some other country, none of which involving America, has to be priced in a currency that is an American. Both treasuries need to hold dollars. Therefore, they need to send oil, they need to send product to America and receive dollars in return. This is part and parcel of the Triffin's dilemma, and on top of that, that is why when you have the beginning of a collapse, the emerging currencies will fall first. Hence why, if they ignore the stress of the emerging nations when their currencies are going down, especially when they already have exorbitantly high interest rates to try protect them, you will find that that is the beginning and the end of the FX crisis. But not yet. But not yet. There are other plans afoot. So that's the USD JPY. Watch that one. Could be a massive mover to the upside in the event. You may recall us talking about the Korean won. That one doubled back when the dollar went weak. It's been extended. It never fully went away. It's still out there. Is it going to stir again? Will it come back onto the boil for us? Possibly. Possibly. Many of you, if you've watched this channel for a long time, will remember that we have warned you about what could be a precursor to the possibility of that great dollar milkshake theory exponent that we've had on our previous YouTubes as a guest a couple of times. And as I say, he's taken a lot of heat, but we've continued to say, be careful. Be careful about the man who's wrong, who thinks hard. He can be wrong, 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 and suddenly very goddamn right. So still lots of respect there for Brent Johnson and someone who sought to have a real understanding. So this is the Korean won. It's already happened once in an Asian crisis. So never say never, friend. Never say never. By the way, on a previous YouTube, we divided by shadow stats as inflationary facts. We divided by the lie number of the Bureau labor statistics coming out of America. We divided silver by that. Prior to this sell-off, silver was at almost the lowest point, but for just coming into the new millennium. Go and rewatch that video. Slightly better for gold. Silver was near all-time lows, but for 99-2000 period in valuation. It's similar against the Dow index. It's similar against so many other things. This is your investment shot. You can use the Bullion Vault links below. For your online, you don't need to take any delivery. You can later sell it off and buy physical later if you want. You can go direct to having shoring up silver. By the way, it gets to be, you can have quite a lot. Storage becomes an issue. Think about that. So you've got to balance that which other people hold for you. But remember, when reset comes, the best is that which you have under your control. So Bullion Vault links below, Pure Gold below as well, that you can have a chat with him. So is this going to re-stir so that we eventually get the super spike in the Korean won? Will this be part of the larger Asian crisis or more global emerging market currency collapse? We'll also look, and we have done in our premium area, against the ruble. So FX will get interesting as this happens, and the inflation is going to be distributed on all these other countries. Imagine being in Turkey, paying 19% for your borrowing. That's at the central bank level. Don't forget, your credit card companies and anyone else are going to add all sorts of margins on top of that. Try get an overdraft at central bank rate. It's going to prove tough unless you're very good credit. So imagine those guys operating in that credit environment. What kind of profits do they need to make in terms of this? So what is our position on all of this? The inflation trade started to get crowded when Kyle Bass came out and said it's double digits that everybody's facing just recently, literally days, and a couple of months before that, Michael Burry of The Big Short started speaking vocally of it and then had his Twitter account taken down and has not returned and has largely gone dark. That is because people don't like that kind of news. It sounds too much like truth. And what ends up happening is Kyle Bass starts talking about it being double digits. That's just about time for too many people to be on the same side of the boat as you. Remember, they should have been on the boat from a lot earlier. So now we take in the debt markets to show you why and how and when this all occurred. So hopefully we're helping people's understandings of this great game that is being played on the inflationary front, but how they can't hide it all. They can't hide it all. They will be caught out in the end. Let's have a wee peek. Let's go. Is that the one I want? We'll take this one. So what am I showing you here? These are the interest rates paid on government debt. Inverse proportionality. The value of the bond goes down, the higher the rate goes up. So bonds were very lowly valued and they were paying high yields at that point. The top of the yield market, the low of the value market. So that's inverted in terms of its value. Why? Lots of inflation. Tricky Dicky Nixon had taken the gold off the dollar standard in the 70s, and you ended up ending with a major gold boom. Note, it took 10 years before it finished, right the way up into 81, 82. This was peak gold and silver season, right here. XAG, right into this. Faulkner did the difficult thing, took away the punch bowl, upped the rates. In fact, you had farmers even in New York. Can you believe that? You'd think that only happens in France. No, it was that extreme. Many of you weren't alive during that. Since then, the Greenspan, the biggest economic criminal and obvious Sabatier and Frankist of the financial cartel scam, came in, and he was Mr. Liquidity, and every time he brought about excesses that led to crashes and responded every time in the same way, killing the weapon that was monetary policy. utilizing and eating up all the runway Volcker had bought him with hard years of difficult decisions. He gobbled it all up, handed over to the Bernanke, who was left with little space to maneuver but to repeat the cycle. And so they continued, and every successive Fed chairman has been forced, because once you set on a certain course, you're an oil tanker, it's almost impossible to turn without introducing the hardships that Volcker was prepared to do way back then. Plus, they want to kill the system. The new system is here, the tech is here, cryptos, etc., blockchain. It's all part of the great write-off. It's all part of the great write-off, and the stuff you made your money in is about to get written off to very low values, I'm afraid. So the reason I've done this on a log scale is to highlight to you, technically, this is back to technical analysis. This is your 40-year cycle right here. You are looking at big charts when you are here with me talking about the debt markets. This was the call we made over a year and a bit ago, saying the debt market cycle is over. The values that were going up during this period while the rates were going down are now going to go down, and the rates are going to have to go up. Inverse flicking. And why have I put it on a log scale? Because I wanted to show you technically the significance in this final capitulation. Technically, if you're a technician, you will know that major bull markets, which this is for the bonds, and it's a bear market for the yields, end with a final capitulation. And in log scale, you get a true understanding of the scale here of the percentage change in rates. It's not so much, oh, you just went from 1.5 rates to 0.5. It's a fact that you lost 2/3 of the rate and you only held on to 1/3. That is why in log scale you got a super low spike right down here, all the way from there. That is your single biggest percentage based move, and it typifies the end of a run. A melt up is the end of your .com boom, your Bitcoin boom, your every other boom, and a final capitulation is often how bear markets end. And when I find the upside bond values chart, I will show you the exact opposite. And we said, that is it, it's the end. Now, since you've had a very strong rally, and everyone is getting excited about this little pullback, this in true scale is what's happened with the Fed. This in true scale. Let's drop down so that you can even see it. Those 3 recent red candles are nothing more than a future bull flag, in my opinion, for further upside. That's it. This whole story is about that. That's how much your rates have come back. Tell me when they spill back down here and come back to these levels. I'll be impressed. Until then, minor pullback and we go up. The trend is changed. Rates must go up. But will they do them quickly? Will they be efficient? No. They're going to keep being forced to let that inflation run. Because the minute they do it too much, too soon, everybody runs out of bonds because the capital values are going down. And they don't want to sit with all the debt. They already sit with most of it, the Federal Reserve. So that is the dilemma we are in. I'm going to have a look if I can spot my chart that I did on the head and shoulders. Here we go. We found it finally. So this is the actual value of the bonds. So a lot of people reacting today. I think they will overreact. People suffer from recency syndrome. They don't go up to the big time frames and the big charts. They will overreact. That's it for inflation. That didn't last long. The Fed is going to increase its rates of return. Instead of upping rates maybe in 3 years' time, they'll maybe do it in 2.5 years' time. Really? Very good. I'm glad you think so. So the overall event, this was your CV19, going for 1.5 years, not quite 1.5 years. That was a major slap in the face. That was top bonds for us. An ascending inverted structure. Everyone should have been commodity long, inflation trade from at the latest here. You could have been earlier as you broke that red line, the basing ascending grind line. That's a concept we teach in our HVF method. You can learn about it. Grab a link below, by the way, and book a chat. Talk to somebody about coming on board and getting the details. There was also a little primer, another concept that we have, smaller structure, fractal within another inside our funnel. That set up, you could have got short bonds there and long commodities. And that's around about September. The first one was around about August, mid-August. And the final one is when you clearly broke the main pattern, which is 1st of October. Now, all of a sudden, too many people showing up on the inflation trade over here. And what do you get? You get this, which I suspect will be a right shoulder rally. A right shoulder. Here's your left shoulder, by the way. You see it there. Can I highlight that little dotted blue line? You have yet to even reach the height, and it will take 149 on the bond value for that right shoulder to meet up there. Good luck. I'm ready for it to happen. And what do I think happens? You break and you go down, down, down. Why? Because nobody wants their debt. That's why they hold it all. China doesn't want to buy it anymore. China doesn't want to buy it anymore. Do the Saudis want to buy it anymore? No, they would rather have Apple shares. Who wants to own American debt? As Lynn Alden has many times made the case, a worthy follow, go check her out, both Twitter, YouTube, I'm on her newsletter. She's made a very clear case. Don't forget, debt is meant to underperform during these periods of great potential inflation. They will lose value. They will pay well below inflation, and they will lock in a substandard return well below the rate at which they're proliferating money and turn it into a 3-decade losing class. During that period, Americans were not allowed to own gold. Roosevelt stopped them in 1930, and it was only made possible again and repealed many, many decades later. I don't have the exact date. It's ordinary. DuckDuckGo. Have a look, and you can tell me in the comments. When it was finally allowed. Why? Because they didn't want you to own the assets. You're okay to buy stocks. They didn't want you to own real money. They needed you to devalue with your dollar and their stinky debt Ponzi scheme. So overall, that's our position. This was the beginning of the end. That was top bonds in terms of valuation. We expect it to run there. It won't be overnight like I've drawn it. I run out of real estate, and you can get a rally for a right shoulder. At what point we're wrong? Well, when you invalidate and you run the head. Some way off. Let's see if bonds start acquiring new value and everybody wants to hold dollar American debt when they are printing 6-7 trillion a year and stimulus checks and giving it out to corporates to buy their own stock. So this is pretty much where we are on that. What about Bitcoin? What does this mean for other anti-fiats? What about oil? Let's talk to you about oil. Oil we have a very close relationship with. We've been trading oil and sharing opinions on oil for many, many, many years. Our most noteworthy calls were actually shorts, ironically, although we are now and have been for a while bullish oil. As part of the great inflation trade. And we identified it as being in a falling wedge. So let's have a look at it. So this is what's happened. In your macro oil chart, the big short calls were, first of all, everyone was getting rich on the cheap debt. During that period, the Rockefeller tax was applied very strongly, and you paid top dollar for your oil. Quite clear. You already had a global tax, guys. It was a controlled industry, oil. Controlled, Rockefeller, Rothschild through the European oil companies, Rockefeller through the American ones, part of the same bird in terms of what they do. And they taxed you while they made money cheap, free and easy, and everyone could buy assets. Part of the pump and then dump scheme. They pump it, you chase in, then they dump it. Then you become a forced seller at the bottom. That's how it works. So big short call July 14 and a long overperformance that actually ran the subprime lows. single digit oil caller. We were actually up top here and calling. You then had that little fake drone stripe and the dumping of Aramco on its own citizens, which was an absolute obvious call. We were very comfortable with it technically and also fundamentally, and you got the deepest low. So the short calls were big from us. Then the reflation, the policies, that which they do to save. It's always pump and dump. They've said, oh, green only, this is bad. Trust me, green ain't delivering everything you need just yet. You need oil, and we've called for all-time highs on oil. That to be taken. We will have a bit of a pause when you start to get to triple digits. It will be very psychological. There's a legacy funnel in here, but you have now, but we left it largely to find its feet. It had a little dip here, and we said we'll re-engage when it gets close to our capping, descending grind line of a falling wedge as part of our inflation trade when it's ready to break out. It actually crossed fairly strongly. It had an initial inflation and then dip, and then walked its way pretty firmly up when you look at the big monthly time frame. And then it started to just pause and wind up and has broken. At this point, we have had longs and we are still long, but it has run into this minor headroom. Now, how strong could the dollar really be and for how long? Well, the problem they have is the emerging markets currencies, as I've said before. So actually, I don't expect the dollar to rip very, very strongly. But it does mean the commodity trade now has a slight headwind because it's priced in dollar. If the dollar has more buying power, there is now more of a headwind. It's going to take some of the steam out of the upside, and it will do a little bit the same to Bitcoin as well. But Bitcoin has its own dynamics, which are far larger, but the dollar being slightly weak, which is why we've said it's in an accumulation zone. Use limit orders and acquire. In fact, we see a good weekend ahead for Bitcoin, for those that are here in the cryptos, and I am still watching the comments here. And I know one or two of you will be asking about that. So let's just show you. Why are we going to get a better weekend? Well, actually, it's held up pretty well, considering that you're supposed to have dollar strength. So let's pop it down to these levels. Let's take some draws off. That's it. You're getting hammers. You have a little bit of a pullback there. Bit of a basing, descending grind line. Quite a lot of buy-up hammers in there. 1, 2, you're currently on a down. The Americans have just opened. It's all buy the bonds, buy the dollar, buy the debt. End of the inflation trade, end of the inflation. Recency, short-term mania syndrome. Guess what? Wait till they start talking about the next stimmy checks. You could have called it either a falling wedge or a flag. You've already had an ABC off a very near low. So what did you get? It's changed colors a little bit. You had a higher high, and you've already had a higher low. Yes, you're having a pullback. Yes, it's gone slightly deeper than the higher high because you've got this whole big narrative. Plus, you're in a very similar, like I was telling you, Le Big Mac, Euro USD with extra cheese. You're in an accumulation zone over here for us in Bitcoin. How long will the dollar strong aspect last? It can't go up too fast. It'll drive the story too much. Emerging FX will start to fail. They know that. They have less and less room to paint, and they're already in the corner. So it will walk its way up. It'll have pullbacks. It'll walk its way up a little bit. And inflation will start to become the story in Europe and in Britain and everyone else who's now giving up ground in dollars, as they now have to pay for their oil in dollars that are going up in value on commodities that have gone up in value. Guess what? It's going to cause depression, fear, and they're going to have to start printing to save their countries. And they're going to need to sell more to Americans. So they're going to have to drop prices and they're going to have to compete more aggressively. So that's kind of what's going to happen. So this is still, for me, an accumulation zone, barring a major deflationary strike. If we got an event similar to CV19, and believe you me, I think there will be continual deflationary strikes to the inflation narrative because they don't want you to make the money. You need to choose your timing. You need to use limit orders. You need to get in at key points. I think this is one of those bear flag dips, bull flag dips that you want to catch quite low to the bottom with tight risk, and build your position up if you don't already have an inflation trade on. But for those that get too big or too overmanaged, they can do another event similar to the pandemic, which can cause shock or media fear. They just need to create sufficient fear, and everyone's Pavlovian, and the banks will lead the charge. Buy the dollar, surge the dollar, and then everyone else, because that gets created as the momentum, it's almost like it's flagging to you, you should be buying the dollar too and supporting the debt. Dump everything else you have. And those kind of panics that occur in the deflationary events will typically cause shakeouts to the inflation trade. But they will be mistaken, and they will resume, and costs are going to go up. Supply chains are going to be in trouble. You're going to battle to get access to things. People will have to pay more. If they do, eventually I predict pricing controls, black markets, all forms of mechanisms that are typically communistic, Bolshevik of nature and tone, anti-capitalistic. You've got to look at who claims communism as their creation. Look at them and recognize that those same people are running the game. So let's take some questions. Steps up, slide down. Yes, that's right. Occasional mini slides, depending on how hard they try. I don't know if they've got another COVID variant narrative that they can push. I don't care about moving averages for BTC or anything else. Yeah, some guys having a guess at who the Sabbatean Frankists are. Yep. We didn't look at platinum. Platinum has been a laggard. By the way, let's show you lumber, because the jokes were all about lumber. See that? Quite a hard crash. Leverage longs in there would be taken out. It has, by the way, been a long for a very long period. So it's still up, but that's brutal. That's brutal. That was getting way too many headlines for their comfort. Copper, another one that's come down a bit. Just wait for the hamster to run. Let's try another platform. Let's go copper. Copper come down hard. By the way, we gave you this HVF trade. It turns out the last one. You see the value of targets right there. You see that? Grind line, little squeezy, dump. Right there. That trade was given to you on this channel, and it performed. That was copper, but came down hard. So what does this mean? Well, I'm long oil and PAA, so understandably PAA's come down a bit. Long run, no change in opinion for me. Not for oil, not for PAA. Well away from when we were getting long. Down here. I think this is a setback, a classic case. By the way, it made our interim number 2. I should show you this. Why have I not shown you nicely? That's not the draw I wanted. I need to be on that platform. Yeah. Let's show it to you here. So this is part and parcel of the gift of having method, guys, and knowing when you're going to have a setback and accepting that it's likely to occur. You see that? Head and shoulders even. A mini head and shoulders on our plains all-American trade. With the neckline being our interim 2. And you have a throwdown. No worries. You are buying in here early and you're adding just in times in there. It's a pullback. Your P&L don't shine quite as much. You're still in. You're still in good money. And where are we trading? 16. Plus. With options. There we go. And there's a cluster of levels, 1637 and 1648. Thank you very much. I'm looking forward to those. And all things shall pass. Don't trade the recency of the current news. They do not have a mechanism. They do not have tools for killing inflation that they've created by the 6 or 7 trillion. I'm sorry. The only thing they can do is create a huge amount of fear and a massive deflationary event, which I'm sure they've already done, aka the pandemic, but they can try to do it again, new variants. Guess what? People get immune. The kind of feeling is they've depressed everybody already. They tried to. Anyway, those that aren't depressed, like me, who live by the sea and are laughing at them and mocking at them, are going to continue to laugh at them and mock at them, doing exactly what we expect them to do. Those that are at their whim and are employed by state will wear masks, get vaccinated, and whatever comes of that will happen. And may the chips land where they do. We try to warn as many people. This is absolutely natural to have a pullback, and pullbacks are sudden and harsh. You always take the escalator up and the elevator down, generally in markets, and I will say to you, you're more likely to be there than you are to be there, and you're closer right now to this mark. That's my bet. You're more likely to get to the other number on the top than you're to hit the one on the bottom. And if I hit the one on the bottom and turn out inaccurate, or wrong, as people say in simple language, it's a bit loaded with ego, right and wrong. Inaccurate and accurate is a preference, but if I turn out inaccurate, I've got a size loss, and I had a go. My account ain't destroyed, neither is yours. What's the risk reward? If you got in here, that's your loss, that's your gain. That, my friend, is risk reward based trading, utilizing HVF method. You can do it too. The link is below. Come and join us. I'm in other longs like Rolls-Royce. We've been watching the military industrial complex. Yep. There's themes. There's all sorts of things going. Let's see your questions. What other questions do you have? Wazza is back. Keep coming, Wazza. We love you, big boy. You're a man. Stick to those guns. Keep firing until all the ammo's gone, bud. And then let the Zulus overrun you. Any thoughts on gold sell-off yesterday? Oh, Jesus, have we not just been talking about the entire anti-fiat sell-off from yesterday? Where have you been? Who's that man? Are you related to Wazza? Hey? There's a lady. It's Wazza's sister. Oh dear. No, that's the thoughts. They smashed it. They sold it. They want everyone to panic out. They want to run stops. They want to say this is the biggest news that you've ever heard before. We might think about talking that we might consider increasing the rate slightly faster than we lied about transitory, and we'll have a meeting about a meeting to do something about it. Quick, bankers, crash the gold and silver market. Off we go. Charge. Put an end to this inflation trade. Do exactly the opposite of what they want you to do. They want you out of the inflation trade. They don't want you making the money. The bankers must do. BlackRock must make the money. BlackRock wants your house. BlackRock wants you as a tenant in their house. BlackRock's run by one of the Sabatier and Frankists, along with the central banking cartel. They want you out the trade. They don't want you building wealth. They need you impoverished, relying on government so that they can bring their communism and UBI in. That is the game. We miss Wazza. Don't ever miss a stream, Wazza. I'll pay you to show up, big boy. We love you. So we've been looking at Lockheed Martin. We've been looking at a couple of defense contractors. You can come and join us and see what we think on that. Uranium would have had a bit of a pullback. All the energies would have had a bit of a pullback. All of them. Here's the Uranium ETF. When we spoke in premium a while ago, we said meaningless lines, such as a grind line, need breaking. We pointed out this meaningless line needs breaking. We've said before for a bit, too many people coming on the inflation trade. We suspect something will be done about that. The Fed that say it's transitory, now suddenly saying, no, they've upgraded their opinion. Crash the market. No, I don't think so. Have a look at SPY, the stock index. We don't always talk about this, but we're very involved in individual stocks. We haven't spoken about indices in a while. Let's have a little look at the SPY. Sell off there. Super low vol it was. So something was brewing. And it's happened. Guess what? It happened here too, and you ended up there. Guess what? It'll happen here too, and you'll end up later there. Everyone wants the equity index to die. The share market. But they keep printing dollars. Actually, if you look at the only measure that I think counts in the current time, monetary to supply, you divide the SPY by M2, you're not at extreme valuations. That's the only measure that I think matters now. By PE, by everything else, forward earnings, all of it. Yes, crazy. But there's too much money being created. It's got to be parked somewhere. It's got to be parked somewhere. That's why Bitcoin is getting not doing so bad, considering. Stay away from crooked indices. Yeah, that could indeed be true, Rami. Could indeed be true. Any other questions? Cyber attacks narrative has been floated around the world, all orchestrated. In Poland, some officials have been targeted by Russian hackers, according to the local. It's always going to be the Russians. Biden had a chat. He gave Putin, apparently, a list. Energy and infrastructure are off limits for hacking. Okay, let's have a gentleman's agreement. Please don't rape my wife and my daughter. Okay, here we go. Okay, that's fine. Thank you. Yeah, you gave me a letter. Okay, I won't do it. That is an absolute setup. That is an absolute setup for exactly that to happen and Russia to be blamed. They're all in on it. They're all in on it. Putin isn't an independent man. He'll do and be the villain, and they all do it. He's not for you. He's not your friend either, I'm afraid. Many of us want to think so because he's less hysterical than the dementia-ridden child sniffer. But that's why they give you that document. What's going to happen? He's then going to go do it, and that's going to be more sanctions on Russia, and the whole thing gets taken down. The FBI was the holder of the Bitcoin secret key for the planes, all the colonial pipeline takedown. How did they end up with the secret? You only get the secret key if you created the wallet. They don't expect most people to know that, because most people don't know anything about crypto. How did they get it? It was under their possession, was the phrase. The secret key. And they said, it's kind of like a password. No, it's what you get when you establish the wallet. That's right. So that means you established the wallet. That means you received the money. And now you're sending it back and you're saying, we're great cops. We caught the guys. It was us. We left that last bit out. That is where we are, guys. That is where we are in this true world. I don't want to get too reset on you. So, dollar has some strength. Don't overbuy that. They can't let it go up too fast, too soon. I think in time, you will find that equities are higher, that you will find in time. Crypto is higher, that you will find in time. Gold and silver too will recover and go higher. If you say tomorrow, no, it's a weekend. If you say Monday, I'll say no. You need to allow some time for this to happen, but let all the reactionaries that are hourly traders responding to news flow go and knock themselves out. Once they're done, they create a value-based system for the inflation trade to be reaccumulated lower down. That is the game. Buy an investment, no leverage, take a long-term view. All fiats will fail. They're trying to, for the first time in economic case history, fail all the currency of the world in one go. This is not about Venezuela. This is not about Zimbabwe. It is about global fiat failure and entire new economic system. That is the reset sniper that we discussed. That's why I can't help but bring it on. And as a result, you will need to be able to move into something that is more likely to hold value when the main benchmarks all are dying. And the dollar milkshake theory is not a support for dollar. It's just in what order do they die? Does the last one get a final pump as everyone runs out of fiat? Well, to a degree, I think it will, but some of it will also be going into silver, gold, Bitcoin, and other things as well. So it's more about the rate and the manner in which the dominoes fall. Emerging FX first. What other questions do you have for me? There are 521 of you watching. We're glad to have you all. So someone says, they've been telling us that silver will rocket for years and nothing ever happens. They will be wrong, and then suddenly very, very right. So the one market they control and keep a lid on more than any other is gold and silver, because it is the absolute accepted real money market. oil will be allowed to go up more. If you're a short-term want to be in the long, oil's more likely to hit 100, go up to $80 from the 70s in the next couple of months than a similar percentage in silver and gold. However, when it all falls down, you won't be able to even buy physical silver and gold at all. It'll either be illegal, not available, and the premiums will be ridiculous. So it's wrong, 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 and suddenly right. So this is a bet against a global system. It's quite possible that gold and silver will even be used as one of the collaterals to some world global currency that they will allege they hold. They'll only lie. They'll do a Fort Knox thing on it again. It'll never be audited. Don't worry. But physical holders of silver and gold will be well received. The current spot price is not representative of value. Go try buy at that price. And even those that are selling are making a big mistake. But they've made a job in creating, selling and making the margin. So they will sell at undervalue because they can buy at undervalue. They're keeping an undervaluation discount window open. A new Bretton Woods moment is coming. IMF mentioned it. Yellen mentioned it in Argentina. We said, we used that very phrase 10 years ago, 5 years ago, 3 years ago. There will need to be a Bretton Woods Mark II moment is what we've said in what needs to come. And all your new world order, behind the scenes, dark states, internationalist parties who have been planning this and planned just about every war that you've ever faced will be there and orchestrating how it all gets broken down. Would love to see you have a conversation with Star Path Academy as Reset Sniper. Yeah, put it on, organize it and send an email to support of the Market Sniper to invite us if he wants to do it. I don't know him myself, but I'm sure we can find out who he is. Banks are in oil with big leverage and debt, says St. Gaulis. Yeah, no doubt about it. Bitcoin is getting killed. No, we're not flipping, flopping. We are an accumulator of Bitcoin. However, changing your mind is a feature, not a problem. So we were initially long on the COT indicator. There was a bit of a continuation pattern. We said there's a time window for it to fall. It has to do it now. We could be a short because there was a symmetrical inverted HVF. It started to sell. It sold off a bit. Couldn't follow through. Rallied. The longer it goes without falling, it now becomes more and more a long. And it's now reached a point where it's actually invalidated all the previous structures. It's now more of a ledge, not a continuation path. And the timing since the COT indicator is now extended. So we expect the move to come very soon. It's not going to be a runaway move because the dollar's now going to be stronger. It's going to be slow. It's going to have up legs, down legs. It's going to react to the news like it recently did. But we are treating it as an accumulate zone. So that's simply the history of our Bitcoin move. And by the way, for the likes of that guy, if you want to know our track record on Bitcoin, it's probably the best in all the major turning points that exist. So we can recap that for your benefit, although I'm sure you don't want to hear it, including when everyone else of a technical bent, including other people that we've spoken about, were calling bottoms in 2018. Over here, we said it's a short. When it was over here, we said you need to get out and take your profits. So I'm afraid generally on the big turning points, we're allowed to change our mind at least once. And we definitely will, if we see, if there's a window for it to spill and it fails to take it, we'll say opportunity now passed. Therefore, the killer blow is not there. And that usually means it will then base build and go the other way, which is a reason for a pivot. That short, that sell, take your profits on that shadow was us. This first cup gold nugget, trade to the long side for the biggest single move. Free to everybody in this community. Free to everyone who isn't even a premium member, has never paid me a goddamn cent, done nothing but watch my videos and shit talk in my comments. Free to you, a commitment of trader indicator that has 100% track record, that if you followed and traded and have the future access to follow and trade, could make you exceedingly wealthy without even having to use wealth. So to you, my good friend, Tell us about your contribution to crypto world and community. Tell us about indicators with 100% hit rate with 9 separate signals, an average of 4 a year that you don't need to be tied on screens that will add value to that crypto community. And know to me, you're a small-minded little weenie that lives on the fringes, who hates people who achieve and who give to others. That is my message to you, my friend. You must be related to Meaningless Lines Wazza. Okay, guys, thank you very much. We'll catch you next time. Yes, they did stop publishing M2. Why would they do that? Why would they stop publishing M2? Because they want to cheat and lie, and they don't want you to be able to catch him half as easy as you used to be able to catch him. That's why. Simple answer. Because they are cheaters, deceivers, and liars that control your money. They never want to give up that power. They are planning the new system. They will transfer you all to it after they've shaved the population numbers, I expect, somewhat. And they continue to seek to control you through their money, power, and war. That is the nature of the world. It's the truth of the world. Get with it. Understand it. That is the reality. You've got a position and function within that. You are not at the top of the table. You're not even at the table that talks about being at the next level's table to one day become at the top table. You're 5 or 7 layers below that, including me. And as a result, you have to read the signs, use as much critical thinking as you can, not be the dude that wants to talk about flip-flopping who doesn't understand trading. Just make the money. This is investment. You can even take this at investment level. You don't have to leverage trade. So that's where we're at. Thanks very much. I appreciate it. I'm delighted. Arrow, 5x your portfolio. Good man. And with that gratitude, may much more rain upon your head, my friend. Much more. Whether they're in India, let it rain hard. Okay, all the best, guys. I'm going to catch you next time. 461 watching. We're done telling you what you want. Free mini series for you, for free. Where's my little hater friend? What you done for free to help people learn how to protect and build wealth in their money. Free COT indicator. Go and find it under the Crypto Sniper for us. Free book in chat. Costs you nothing to find out what we do and talk to someone who took those same steps. And you can decide if you want to come. Community of the willing. Don't like it, don't join. It's all good. Watch the free YouTube. We don't mind. Give us a share. We love you for it. Don't. It is what it is. It's fine. Thank you very much for those that support us. We catch you later. All the best. Bye-bye. Namaste.